What's going on, guys? This is David. Welcome back to the channel. As always, remember to like, share, subscribe, hit that notification bell, and share the video. Helps the channel grow. I really appreciate it. We just want to get this information out to as many people as possible. So, I really appreciate that. Like, share, subscribe, hit that notification bell. So today, this is a very important video. Probably one of my most important videos. Got a lot of information to share with you guys. Take some notes. I got some notes written down that you're going to see me referencing to. But yeah, today's video is how to invest. How to invest. This is the beginner's guide to investing. By the end of this video, you're going to have enough information to be able to build you a really strong portfolio that could potentially be life-changing. So stick around to the end of the video. It's going to be a lot of information shared. So let's get right to it. So first, we're going to talk about how to invest. It's going to be part one, right? This particular part is for my new investors who don't really know how to look for stocks, don't really know about researching. My recommendation, and I'm not a financial advisor, is for those who don't really want to be actively involved, there is a hands-off approach. There is a hands-off way of investing where you don't have to be actively involved. You don't have to sit up there and watch the stock market. You don't have to choose any stocks. And it can be very beneficial to you, right? So what I'm referencing to is a Fidelity Go account, right? You want to go to fidelity.com and you want to open up you a Fidelity Go account. And basically what this is an automated investing account, right? Automated investing. You just answer a few questions. They want to know what type of investor you want to be, how aggressive you want to be, and everything is done for you. All you have to do is invest money into this account, and they'll automatically invest it for you into some like funds, bonds, and things like that. Very safe, and they also provide some nice returns. I do have a Fidelity Go account as one of my accounts. All I do is put money into it, and I let the system handle it. They invest on their own. I don't have to worry about it. I just watch my account continue to grow, right? So you will receive some good returns. Not as much as I do when I choose my own stocks, but it's a good hands-off approach that I do recommend for investors who don't want to be actively involved. So the first part is Fidelity Go. Go to fidelity.com, open up your Fidelity Go account, answer the questions. You can start with as little as $1. All you have to do is, transfer the money over, and it gets automatically taken care of for you, automatically invested for you, completely hands-free, hands-off. For my new investors, I recommend that. So I also had another YouTube video specifically on automated investing. So, check that out when you get a chance. So that's part one, right? So part two is for our investors who do want to be actively involved in your account. So what you want to do is go to fidelity.com. I use Fidelity, right? I recommend this platform for all serious investors. No disrespect to any other platform, Robinhood or whatever the case may be. I just like Fidelity, right? They have a lot of things to offer, a lot of different investment strategies. So, yeah, I think it's definitely worth it. So go to fidelity.com, open up you a brokerage account, right? No minimum investment to get started. But I do, before I get into the details, right, I do recommend maybe starting this account with 500 to 2,000, right? It could be less, whatever works for you, but it's just my recommendation, right? Start this account with, 500 to 2,000. It'll definitely get you on the right foot. So now that we got that resolved. We talked about the Fidelity Gold. Now we got a Fidelity brokerage account, right? Now let's get into the details, right? How we're going to start, grow, and build this account. And the first thing I would say is now you have to change your mindset, right? This is not an overnight sensation. I don't talk a lot about penny stocks. I discuss stocks that's proven, right? Because this is a long term, right? I would recommend, giving yourself 5 years for this portfolio to build and grow and watch it do its work. So let's get started. How I would start my account and how I did start my account a few years ago, right? Very important. We're going to start with our tech/growth stocks, right? These are going to be the stocks that's going to really drive your account, right? Tech stocks seem to grow quickly. They're very aggressive, but they can take your portfolio to the next level. So I recommend having tech/growth stocks in your account. It don't have to be tech, but definitely a growth stock or two in your account. I actually recommend having 2 to 3 of these in your account to kind of feeds your account. It kind of puts that supercharge in your account, right? So I want to give you guys a list of 10 tech/growth stocks that I recommend that you look into. I'm not telling you what to buy. I'm just telling you what to look into, right? So we're going to start with, what do we have here? We're going to start with Microsoft, Apple, Facebook, Amazon, Google, Square, AMD, Nvidia. What else I have here? PayPal, Shopify, Disney, right? These are just a list of a few, right? List of a few tech/growth stocks that I recommend that you should have in your portfolio when you were building this portfolio out, right? Choose 2 to 3 of those. Then those are going to be the foundation, right? This is going to be that gas that's going to supercharge your account, right? When that market is going up, when that NASDAQ is going up, when the S&P is going up, you're going to see these particular stocks play a significant role in growing your account. So this is what you want to start your portfolio with. Then we want to go into our funds, right? These could be ETFs. These could be index funds. These could be mutual funds, right? So we talked about the fluctuation in the tech stocks and the growth stocks. Now you want some consistency, right? You want some balance in your account. You want some funds that's going to kind of follow certain markets, and that's going to grow with those markets. You don't have to focus on particular stocks. So let's talk about a few funds that I would recommend that you look into and possibly add to your account. First one is VOO. We have VTI, VNQ, XLE, XLY, SPY, Triple Q, QQQ, FSCSX. These are a couple of mutual funds. FSPTX, FSPGX. So those are some funds that I recommend looking into. Nice to have into your, in your account. You want to have some consistency, a strong little baseline that you can depend on even when those tech stocks are fluctuating. So so we start off with our tech/growth stocks. We go into our funds, and now we get into a little bit of passive income now, right? A little bit of real estate, right? No, not owning property, but investing in real estate without having to worry about tenants and all this type of stuff. They call them REITs. This is real estate investment trust. So write that down, look it up, right? They focus a lot on passive income. I have quite a few REITs in my portfolio, right? So I'm going to give you guys a list of about 10 that you can look up. I suggest adding at least 2 to 3 in your portfolio to kind of get your portfolio started and growing here. Let me adjust this camera, keep slipping down here. Yeah, so I'm gonna give you this list here. Let's start with O. And if you look at my dividend videos, I always mention O. I get paid by O every single month, right? O, Maine is another one. I get paid with Maine every single month. Maine, MAIN, APTS, GOOD, LTC, STAG, STAG, CTO, PSEC, CIM, and SLG. So take a look at those REITs. See if they, may fit what you may want in your portfolio. I recommend having REITs. They provide me passive income that I don't have to worry about. So yeah, that we started off with our growth stocks, tech stocks. We went to funds. We went to REITs. Now let's get into some dividend stocks, right? Dividend stocks. I'm gonna give you a list of dividend aristocrats, right? Dividend aristocrats are dividends that have increased their dividend every year for the last 25 years. So once again, these not penny stocks. These are proven companies that have stood the test of time, right? So I'm gonna give you a list of dividend stocks. I'm gonna give you 15 of dividend aristocrats. Currently, dividend aristocrats. Once again, I recommend adding 2 to 3 to your portfolio to help get it started, build it up, and get off to the right track. So let's start off with MMM, right? 3M is what you usually hear. ABBV, AFL, the letter T, that's AT&T for those, some you already know. ADP, KO, which is Coca-Cola, CLX, Clorox, XOM, FRT, J&J, LOW, which is Lowe's, PEP, Pepsi, PG, TGT, Target, sound familiar, and WMT, Walmart, right? So these are proven companies that have stood the test of time. They pay dividends. They increase their dividends every year, or they have been for at least the last 25 years. So there are a lot of dividend aristocrats out there. You also have dividend kings, which are dividend stocks that have increased their income every year for the last 50 years. So I think it's definitely important to have some dividend stocks in your portfolio. Some you'll see growth with, but what you definitely have is passive income through their consistent dividend. So I recommend having 2 to 3 of those in your portfolio. So there you have it, right? Now we have a solid portfolio to start with. You can't say you don't know how to start a portfolio. You don't know what to buy or anything like that. You have your tech, your growth, your tech / your growth stocks. You have your funds, you have your REITs, and you have your dividend stocks. And most of the REITs, your REITs pay dividends. Your dividend aristocrats pay dividends. There's some tech, Apple, Microsoft, that pay dividends. A lot of those funds pay dividends, right? Passive income, right? So you have a portfolio that's ready to grow, ready to start and hit the ground running, and it's going to build up and really change your financial situation over time, right? So one last thing I want to talk to you guys about, right? This is the key. This is the secret right here. So you don't want to buy stocks one time and be done with it, right? Right? You got to have a strategy. And here's the strategy. Dollar cost averaging. That's the key. Dollar cost averaging. I've talked about this before. Dollar cost averaging basically is investing a set amount of funds in your portfolio on a consistent basis, whether that's weekly, whether it's bi-weekly or monthly. You have a set amount of funds that you're going to invest in your portfolio. I like to reward my stocks that's performing, right? If you're performing for me, I need to reward you by keep investing in you. So that's what I do. Every 2 weeks, I'm buying into my portfolio, and I'm buying into stocks that's done well for me. So that's how my portfolio keeps growing over time. Even when the market's down, I get to buy more. So when the market goes up, I have more stock to work with. So that's the key, and that's it. That's it, man. I just gave you guys the blueprint. Now all you got to do is get started. Give yourself 3 to 5 years to build this up, but be consistent. Be dedicated. You have to be dedicated to this process, right? And you'll reap the benefits over time. But remember, I'm not a financial advisor. Do your own due diligence. But there's a lot of information in this video. Make sure you take notes, pause, rewind, share, and let's get going. And that's all I have. Remember to like, share, subscribe, hit that notification bell, leave some feedback. Let me know what you guys think. And until next time, I will talk to you guys later. I'm out.